Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have Eric Coffin with me once again. He and Scott Gibson are the founders of the Metals Investor Forum, and I have a very high regard for Eric's understanding of evolving exploration projects, and I can tell you that the exploration industry as a whole feels the same way. That's why I personally read pretty much everything that Eric writes on, especially the companies that I'm covering that he's also covering. And you can and actually you should visit his website, hraadvisory.com, where you can sign up for his really very reasonably priced service. Welcome, Eric, and thanks for joining me again.
Thanks for having me on, Jay. I'm always happy to talk to you.
Oh, thank you. It's always great to have you because you do have a lot of great ideas, and want to find out about what your best idea was, as it turns out, for 2019. What stock that you picked did the best? Performance-wise in the market, anyway.
I think the one that did best, and I have to admit, I don't have like a list in my head of where things are at percentage-wise, so I'm frankly guessing here. Okay. I mean, there's two or three that were pretty close to each other, percentage-wise. I think one was Great Bear, which of course is good to a lot of people.
Sure, love it.
I think we all follow that one.
Yeah,
and it started out the year I think around $2, and it's trading at about $8.70, $8.80 now. Just it's one of those situations where obviously they put out a lot of great drill holes, but I just thought their execution was so good, and I think anyone who's starting an exploration company and wants some tips on how to present information and how to convey exploration ideas and the development of your exploration story could do a hell of a lot worse, frankly, than listening to a bunch of Chris Taylor's interviews.
Yeah,
he's very, very good at that. And there's obviously Great Bear's 880 because of the drill holes. They've generated this new zone that looks like it's got, frankly, enormous potential to contain ounces. But he and Bob Singh have just done such a great job of presenting and explaining what they're doing and why they're doing it. And the fact that they've managed to keep the share structure really tight hasn't hurt either, obviously.
Yeah, no doubt. Yeah, go ahead.
Close to that one, and I hadn't really thought about it, but close to that one in percentage terms, it is actually. I wouldn't have guessed at the start of the year, honestly, and that's Lion One. I just realized it's probably up there in the top 5 as well. Lion One's a stock I've followed for a very long time. I know Wally Barakoff well. I've got a lot of respect for him. Wally's a very sort of old school Howe Street type promoter, and I think that, I think some mining analysts that rubs them the wrong way. Yeah. But I mean, I love that about Wally personally. Plus, as I always point out to people, you can say what you want about Wally, but he was a founder and a driving force behind 3 companies I can think of off the top of my head that collectively represented $4 or $5 billion in takeover value. So yes. The guy walks the walk. You know what I mean?
Yep.
But a big change, as you're well aware, this year was the arrival of Quentin Henney as a advisor, and essentially Quentin came in and redesigned the exploration program for Tuvalu. Quentin envisages it as a large alkaic gold system, something Quentin knows a lot about. So they've shifted to this kind of go big or go home philosophy, which I kind of like. Tuvalu is it's a permitted, smallish resource, several 100,000 ounces, very good grade though, narrow veins. I've never doubted there's probably 2 or 3 million ounces there, but drilling narrow veins takes a lot of holes. There's no getting around that. But if you can get the kind of market attention it's got, the difference that makes, and you can say the same thing about this happening at Great Bear, when you get that kind of market attention and market value, what that means is the amount of dilution you have to suffer to do large-scale drill programs gets smaller and smaller. Yeah. And that's an incredibly big advantage.
Absolutely.
And Lion One's kind of there now. They just raised $10 million. Quinton's targeted some deep holes under the Tavatu lode. The first one hit. It was a good hole. That's extended things down 70 or 80 meters. But he's also going after a much larger area in the new exploration licenses that Lion One got a couple of years ago. And Quinton is very much looking for a big system, and the market's just really glommed onto that.
Absolutely. All right, so those are two great picks, no doubt about it, and both of them I love both those stories, Eric. What about as we head into 2020? What markets do you think you're bullish? Well, what markets are you bullish on, and which ones do you think you might want to avoid in 2020?
I'm still, I'm still more comfortable with gold, silver, and I'm not necessarily saying it's going to go to the moon.
Yeah.
I don't really think it has to. I don't have a lot of trouble seeing gold tacking on a couple $100 an ounce through next year, and if it does that, there's no reason silver won't tack on $3 or $4, and that's enough for both of them to keep speculative interest in the stories. The big question mark for gold, I think, is going to be, does Wall Street roll over?
Yeah.
To me, it feels like it's overdue, but there's just so much liquidity getting pumped into the system right now that, who can call a top on that thing? There's just waves of money getting thrown at it. I mean, at some point, it's going to run out of buyers. I mean, the sentiment's so positive on Wall Street. It's so one-sided. I mean, that does you tend to get corrections when you start seeing, 95% bull-bear ratios and stuff like that, which is pretty much where you're at now. I like copper more, I guess I would say, with the, sort of resolution of the mini trade deal, if you will, that they're apparently going to sign one of these days.
Yeah.
But and I'm a little more confident about copper, partially because there, as always seems to happen with copper, there's been a few areas where there's been production bottlenecks, strikes, things like that. You haven't really seen the supply build up. Longer term, the copper market fundamentals look fantastic. In the short term, the one thing I'm still not that comfortable about is it's not so much enough. It's not enough for me just to see the trade war resolution. What I'd really like to see is some evidence that China has started to reverse what's been now a 10-year decline in its growth rate.
Right.
I mean, its growth rate's been slowing literally for a decade. And I'm not, China's already been through that, super growth rate where it steps up to the next level. I don't expect it to go back to 10% growth rate. So it's not going to happen.
Sure.
But it'd be nice to at least see it going the other way, because I don't think it would take much of that to get copper back over $3. The other base metals, same issue, because I'm still a little concerned about China. Zinc has got some strange bottlenecks. Zinc might surprise everybody next year, not because there's any huge undersupply. The issue isn't really at the mine site gate; it's at the smelters. China, as I've said for years, and also as John Kaiser has said for years, they're more serious than they get credit for when it comes to trying to cut pollution down.
Yes.
And they've basically told a bunch of smelter groups, you're done, you're over. You either do a consolidation and group up together and find a way to generate this much metal with less pollution, or we're just going to shut you down. And that created a real bottleneck. I don't think there's a real shortage of, zinc concentrates or lead concentrates, but there seems to be a growing shortage of actual smelter capacity, and that can feed back into a supply shortage, because what happens is it's a straight supply and demand situation. If there's too much concentrate, not enough smelters will just keep jacking up the price that they charge miners to smelt it, and it'll get to a point where the more marginal mining operations just aren't going to be able to afford it. So
sure.
I think some of the supply people have been worried about on that side of the base metal space, I don't think it's going to show up, because I think these TCRC charges of the smelters are just killing these guys.
All right. Well, that's
good for us. It's not good for them, but it's good for us.
All right. Well, I mean, these are the kind of things that you will be addressing in your newsletter as well. It's at hraadvisory.com, and you keep people really up to date on a whole host of market issues. But with just a couple of minutes left here yet, Eric, let me ask you about what are your two top picks going into 2020, and give us a quick reason why you like them.
I think in terms of exploration potential, and because they've got I think they've got very good market side guys. A company I like a lot is as you know, is Vizsla Resources, which is VZLA on the venture. They just acquired an entire silver mining camp, most of which has never been explored by modern methods. It's actually got an operating mine on it. It's a deal that gets fairly expensive 3 or 4 years in. Management's stated quite plainly that they view this as having a 1 or 2 year timeline where they need to prove up enough ounces for it to make sense for them to finance the whole purchase, the end option purchase, if you will. What I like about this is it's got grade, and grade. They've reported a number of 4-digit silver grades. By that I mean more than a kilogram per ton. And this isn't one of those underground Mexican deals where it's 200 grams silver equivalent and it's every base metal under the sun. Their silver equivalent is silver and gold only. In some ways, it actually reminds me of both Santa Elena and Las Chispas, which were the projects that Silvercrest Metals and Silvercrest Mines and now Silvercrest Metals, the new company Santa Elena is a mine now. Las Chispas will be, but they're similar in that they've got those very high grades and high gold grades along with the silver. I could see Vizsla reporting a lot of really, really impressive drill holes going forward. Yeah. They just put $4 million in the bank. There's another 2. I think it's closing today, literally. So
they'll be very actively drilling right away, I guess, right?
Yeah, like they just said, look, we have to know whether we've got a resource here and a big enough one to bother pulling the trigger on it. So they're not going to screw around. Because some of it's actually a mine site, there are several areas that they don't actually need to do any permitting for, and the other areas it's really just minor land use permits with Seminat, and it's a disturbed area, so it's not something where I think you're going to have any issues with drill permits or anything like that.
All right, Eric, can you give us one more name yet? We're basically out of time. Yeah.
Very quickly, we want a straight-up drill spec, no guts, no glory. I still really like Northern Shield. They just announced about $1.75 million in financing that they closed on. That gives them enough money to drill both Shot Rock in Nova Scotia and Root Cellar in Newfoundland. Both of those are essentially brand new epithermal discoveries. That's really what I like about the company. I love seeing management groups go and actually try to find new stuff, which they did. They're both, I would classify both of them as sort of pre-discovery. They're going to see their first drilling in the next 2 or 3 months. If they hit, the stock could go a long way.
All right. Well, we'll have to leave it go at that. Unfortunately, we're out of time. Thank you so much, Eric. And again, folks, HRAadvisory.com. If you want to know a lot more about what Eric is just giving you a little hint about here, be sure to sign up for his excellent newsletter.